welcome to the Global View on this Tuesday. I'm Andrew Gagan. Great to have you with us here at ausbiz. Let's check what happened overnight. Global stocks have begun the week strongly as investors look to earnings results from the mega cap tech, while oil prices have tumbled. The major indices on Wall Street finished high, with the small cap Russell 2000 the outperformer. The energy sector fell as crude prices plunged around 5% on easing supply concerns. US-listed shares of BHP and Rio rising as the iron ore price surged. Alphabet, Apple and Meta rose ahead of their results this week, while Amazon and Microsoft will also report earnings. Ford shares fell around 3% in extended trade after the carmaker posted third quarter profit of 22 cents a share compared with 30 cents a share a year earlier. Boeing shares dipped after the aircraft manufacturer launched a stock offering that could raise up to $22 billion in a bid to shore up its finances amid an ongoing workers' strike. And shares of Trump Media and Technology Group, parent of Trump Truth Social, surged to their highest level since June. And in Europe, Philips said that demand in China slumped significantly in recent months, forcing the Dutch medical device maker to lower its sales outlook for the year, sending its shares down around 16%. Well, US Treasury yields have climbed as investors wait on key data releases this week, including Friday's jobs report for October, while rising speculation that Republican former President Donald Trump will win the November 5th presidential election has added to that move, betting markets, including Polymarket, giving Trump the advantage in winning the White House. And in US data, the Dallas Fed Manufacturing Activity Index fell less than expected to be at a 30-month high. Production, wages and the 6-month outlook rose while employment fell. So the yield on the US 10-year Treasury note hit a 3-month high and is around 4.24%, the 2-year at 4.1%. And the US dollar rose as much as 1% against the yen, with the Japanese currency falling to a 3-month low following the election loss by Japan's ruling coalition, which has raised political and monetary policy uncertainty. That comes ahead of the BOJ meeting this week. The Aussie dollar trading lower at 65.9 US cents. Looking at commodities, oil prices have tumbled in the wake of Saturday's retaliatory strike by Israel against Iran's military, which avoided oil and nuclear facilities, as dissipated fears of disrupted energy supplies out of the Middle East, seeing Brent futures fall as much as 6% to $71 a barrel. Copper prices are a little weaker, while iron ore has jumped almost 3% to close to $104 a tonne. And the gold price has eased slightly to $2,742 an ounce. And Bitcoin has strengthened, approaching 70,000 US dollars. So let's get across what is moving in markets with a focus on Wall Street. Steve Sosnick joining us from Interactive Brokers. Steve, welcome back. 1 week to go. And you feel as though it's very much risk on now as markets prepare for a Trump victory.
Good morning, Andrew. My first comment on that would be not so fast. I think the betting markets, and I say this in full disclosure, we actually own a betting market, Forecast X. So I have a very close eye on this because we do participate in it. What we've seen is the money is going toward Trump. It's not clear that the market has gone that way. And the regular polling is very much 50-50. So it's clear that the market is expressing a view. I'm not as certain, the betting markets, I should say, are expressing a view. I'm not as certain that the broader market is, or that the political pollsters are. In some ways it's sort of self-fulfilling. You've got a lot of, there's a lot of sort of Trump trades that the Republicans, typically do favor, a market-based approach. And so that's why we're seeing this. Certainly, though, the DJT stock, which you pointed out, that has become, one of the great meme stocks now of our time. And that is really, truly dependent upon the former president's chances.
Yeah, well, we're seeing that reflected in crypto too, with Bitcoin continuing to rise at this point.
Yes.
So, Steve, I guess we have 3 potential outcomes here: a Trump victory, a Harris victory, or the worst case scenario, a contested result. How would the market respond to a Harris victory then, do you think, given how markets are moving at the moment?
don't think that the stock market is going to react that negatively. I think the bond market probably actually comes, I think bond yields probably improve a little bit. I do think some of the rise in yields, most of which I do think is related to the economy. I do think that some of that is the fear that honestly, neither candidate is exactly preaching fiscal discipline, but the Trump tax policies clearly, by independent measures, would be more of a budget buster than Harris's policies. The other issue is, I'm trying to say this without being, as unbiased as possible. I think that a Harris victory implies a contested election, unless she wins in a real landslide. And there's nothing to indicate that that's in the cards right now. There are already all sorts of court challenges. I'm not going to bore the viewers with all the minutia of U.S. politics, but there's already two states suing, to keep people off the ballots. And, at some level, you have to wonder if one party's strategy is to get out the vote and the other's is to suppress the vote. You kind of have to wonder what's up with that. So there's a lot of moving parts here. I think the only way that it's fully decided very quickly is if Trump wins by a wide margin. Other than that, I think you're going to hear a lot of back and forth, and I have a feeling we saw the roadmap 4 years ago, I think a narrow Harris victory would be contested.
So if it is contested, what are you likely to see, and if it's protracted, in terms of those bond yields, the US dollar, gold, how are they likely to react, do you think?
I think not well. I mean, I think gold would react well. I think some of the other assets would not act well. One of the things that, the U.S. has been financing more and more we've been financing more and more of our own deficits, but I do think a lot of our bonds are bought by people outside the U.S., and I can't imagine that they would be all that thrilled with seeing another round of chaos here. And that would spill back into risk assets of all types, because I do think that would create some real uncertainty about, the political structure. One of the things that I think is really underappreciated is that there's we have a solid rule of law with a lot of precedents, and all this stuff is laid out well. And if you do have a group that's willing to, basically try to do their best to work around it to gain power, to remain in power, that becomes problematic. And so I don't think that puts us in a very good light.
Well, meanwhile, Steve, of course, there's still so much to consider outside of the election in earnings results and also some key data at the end of the week. Just in terms of earnings, I see you make the point, just in terms of their weighting. I mean, it's critical as far as that movement of the stock market's concerned.
Absolutely, because what we have here is, 5 of the Mag 7 are reporting this week. Tesla obviously was last week, and Nvidia's off cycle. They'd be, I think, they're roughly, 4 weeks from now. So it's really these 5, and I guess you can't ignore Nvidia because their best customers are essentially the five, the rest of the Mag 7. And so we will want to hear what their approach is to AI. And then we also have a GDP report on Thursday our time, and we're looking at about 3% as the consensus estimate. And the Atlanta Fed, who tends to be a pretty good predictor, is already saying 3.3%. Part of that involves some price numbers. It's a GDP price number, not exactly the core deflator, but something akin to it. So that could give you clues to the Fed's preferred inflation measures. And on Friday, we have non-farm payrolls, unemployment, and all that kind of fun stuff. And we're looking for a big drop in payrolls. The market's looking for around 110. And then you have an unemployment rate unchanged to 4.1%. But getting back to your original point, these mags, the 5 stocks, just the 5 Mag 7 stocks are 20% of the S&P, a little more than 20, about 21% of the S&P 500 by weight. And when you throw in AMD, which I'll call Mag 7 adjacent, that's, call it a third of the NASDAQ 100. So, yes, I mean, if they move in one direction or another, that's going to have a big swing. Typically, that doesn't happen. Some go up, some go down, and it tends to mute itself. But You throw in all these potential events, and there's all these known events, I should say, known unknowns, and there's a lot of potential for some hiccups up or down, depending on the results, depending on the guidance, depending on the economic reports.
And that key payrolls report at the end of the week, Steve, any indication from you that that could surprise and therefore influence the Fed at its next policy meeting?
Well, the last few have been surprises. And the other thing to keep in mind is that the monthly hourly earnings wage number has not really come down. It's been pretty sticky. And that's going to have to be something the Fed's keeping an eye on, because how do you reckon with the fact that maybe the job market is slowing, but if people are continuing to earn more and more money, which, by the way, is a very good thing. That's sort of a high quality problem, but it doesn't help you on the fight against inflation. If wages continue to be sticky, it's not telling you that the labor market is slowing down the economy or contributing to stable prices. So there's a lot in there. I think the market also, I guess, on the other hand, the bar has been lowered. So, at this point, if we drop from the 200s, like 220-ish to where we were before, to, I think it was 240, I don't have the number in front of me, but to, let's say, 150, well, that would be a big surprise to the upside if we've already gotten ourselves down to 110. So there's a lot of moving parts in there. And I think this is why one of the numbers I'm watching here is there's an index called VIX 9D. It's also a SIBO index. It's basically the same as the VIX, except where the VIX uses options with an average of 30 days. You had the chart ready to go. Where VIX uses an average of 30 days till expiry in their calculations. It's based on price of S&P SPX options. The VIX 9D uses options with a 9 days to expiration, and the 9D is the one with the red green candles. And so you see how it dipped. It's much more volatile. It itself is a more volatile index, and you see how that's flirting with recent highs, whereas VIX itself is kind of off its highs and sort of meandering around that 19-ish level. So it's telling us that the market is anticipating more volatility in the days to come, which again, that 9-day VIX includes an election too. So I'll actually argue I wouldn't be at all surprised if I saw that number increase even further.
Steve, so much to watch over the next week. Of course, we're going to catch up with you on the eve of the election.
Indeed.
Thanks so much for joining us from Interactive Brokers.
My pleasure, and you'll see if I have a drink in hand or not that day.
All right. Okay, Steve Sosnick from Interactive Brokers there. Taking a look at where we're likely to get going, positive, as you can see, SPY futures up around 0.4%. Stay with us because the open is a couple of minutes away.